Your initial take.
Yeah, so this is below expectations. We did expect the non-manufacturing PMI to be weaker because we have seen in the month of October, COVID outbreaks seems to be happening in quite a number of places, and the service PMI is most sensitive to the COVID outbreaks. So quite a weak set of data, but in some sense, this is something we've seen previously. Whenever we had COVID outbreaks, that we would see activity softening.
Right, and one of the offsets was, at least flagged by our economists here at Bloomberg Economics, was construction spending. What sort of offset do you think policymakers will need to put in place short term?
Right, that's between the infrastructure building and manufacturing investment. Those are the bright spots of the economy, which the government has some influence on. What we are hearing, we saw in terms of bond issuance, funding, financing, that happened a couple months ago. But now perhaps we're seeing more on the ground construction activity picking up. But the key takeaway here is that you can do more infrastructure and manufacturing investment, but it also depends on how much of a hole you have to fill in between the property slowdown and the COVID impact. So whenever you get another round of a COVID impact, even though you're still pushing for infrastructure and manufacturing, net things are still soften somewhat.
We know the headline numbers now, and I'm guessing you haven't had a chance to look at the sort of sub-gauges, but is there any specific sub-gauge within the PMI data set that you're curious to see?
Yeah. I think a couple of things. One is domestic versus external, right? So over the past year, even though headline growth has been pretty weak, we know that external demands supported Chinese activity. So we would be interested in seeing the trajectory of export orders and whether external demand is softening as well. If that's softening very fast, it will be quite concerning. And two, I think in terms of employment, that is something I think economic growth, whether it's a 3 or 4, perhaps is not as important to policymakers, but employment and labor market stability, that's quite important for policymaker. And lastly, I would say inflation is something that is worth watching, and these PMIs are giving you a leading indicator on PPI, CPI, as we see that coal prices are increasing again. So that's another sub-index we'll be looking at.
Okay, final question. How does today's set of numbers inform you what the activity numbers might look like for October?
I think this is a leading signal that October activity may be softer, especially after we saw September activity data released last week, industrial activity quite strong. But then coming into October, if the manufacturing PMI is 49.2, perhaps October sequentially industrial activity would not have the momentum we had in September.